Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking S&Ps, another huge sell-off following up on Friday's sell-off. The sell-off is continuing to gain momentum as this day ended up much lower. We were actually down 600 points on the Dow at one point, down very handily in the S&P, and this sell-off has gained momentum. We got a little bit of a break this morning. We even got briefly positive on all three indices, and then the sell-off just turned around. We've got the discussions on the debt ceiling happening again. We're days away from a decision on whether there's going to be another government shutdown, and you've got more animosity between the political parties than we had during the prior potential and subsequently the truth of government shutdown in the last negotiations. So one of the things we mentioned when talking about the continuing resolution last time was that it only took us to mid-February. So again, less than a week away of finding out whether we're going to get another shutdown. And with the animosity in the government, sell-off is accelerating here. The VIX also jumped up into that 22 handle. We're now got a VIX that is at its highest level since June of 2016. And all that was a spike and then a return back to what at that time was the mean of about 11. The mean on the VIX is actually rising now. The VIX is a mean reverting index. It doesn't have price patterns. It doesn't go up forever or down forever like some of the other futures and commodities can. It reverts to a mean, but that mean can shift. And right now we're seeing that mean shift to a higher level. We've had such a long stretch of low volatility that sort of the curve of the VIX is actually coming into play now with, again, that mean potentially rising. Highest level now since mid-2016 on the VIX, and we closed near the highs on that. Also, looking at it, earnings are strong, so the sell-off could see a bid in the next few days if we can get some of these other factors, like a pause in interest rates. 10-year note kind of paused today. It went a little bit higher on the yield and then pulled back in toward the end of the day. We have no new inflation figures coming out within the next couple of days, and we had Neil Kashkari from the Minneapolis Fed talk down the idea that the Fed was going to get more aggressive by saying he wanted to see more inflation come into the picture before actually acting on rates. His opinion only. We don't know where the consensus of the Fed is at this point, especially given the new chairmanship of Jay Powell. But again, S&P scorecard so far with 50% of the S&P having reported, 75% have beat on EPS, 80% have beat on revenue. So earnings are strong. Got a blended earnings growth rate of 13%. We're expecting double digits. So far we have it. We've got a full 50% of the S&P left to report, but right now the sell-off just gains momentum and continues on a Monday. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.